I'm here with Arindam Das. He's the regional head of HSBC Securities Services for the Middle East and North Africa. We've been talking about in the last chapter about the opportunities for companies investing in the Gulf. Now let's talk about the opportunities for institutional investors. And you were saying earlier that the composition of investment has changed from being almost totally a retail market to one where institutions are becoming much more interested. So give me a little bit more detail on that.
Thanks, Brian. As I said, it's two types of transformation that is taking place. One is from retail to institutional, and while it's still majority retail, the quantum of institutional investments is significantly higher. A related point is that it's the institutions which are setting the tone and the direction of the investments. So retail is often following the guidance and the direction set by institutions. So that's important. The second thing is the flavor between local and international. So earlier, back in 2005 or 2006, it was pretty much driven by local investors. Now, institutional and foreign institutional investors have a significant say in which the markets operate.
Okay, and what sorts of services can HSBC provide for those institutional investors coming into the Gulf?
As I said, anything after execution of trade is within the remit of our security services business. So it starts from clearing and settlement of the trade, which itself is a pretty complex set of activities, right from matching of the trade to rectifying the mismatches by talking to the local brokers, by talking to the regional brokers, by talking to the global custodians. So it's a very complex chain which handles multiple intermediaries, and all these mismatches have to be solved within a very limited period of time. Then you have the foreign currency component of it, because it's all money, or pretty much money coming out from outside. So you've got to do that bit. Even after the settlement of the trade, we offer custody throughout the entire life cycle of the asset class. So till the time that the investor actually sells off the assets, if there are any corporate actions, which means dividends, rights, bonuses, HSBC as a custodian is responsible for announcing that information, ensuring that the investor's rights are fully protected and they get all their corporate benefits that they're entitled to.
Okay, now with institutional investment, there's normally some breakpoints, aren't there? So it depends a bit on the size of the market, the liquidity of the market, and even whether it's included in certain international benchmark indices. So, I mean, give us a bit of a recap on where the UAE or the other Gulf countries have got along that process.
It's a very interesting question that you raised, because it's very topical in the Middle East. Two of the Gulf countries, UAE and Qatar, have been on the cusp of a potential upgrade from frontier markets to emerging markets in the MSCI indices. Unfortunately, that's been going on for almost 3 years, and it hasn't happened. But I think what has happened is a heightened level of awareness of what are the parameters that these agencies look at before considering an upgrade. So I don't think the moot point is whether today UAE and Qatar are considered emerging markets or not. The moot point is the development in infrastructure that has taken place, which should warrant an upgrade. So for example, earlier there was a concern on the account structure that is there in the Middle East. The way the settlement of trades take place, is there true delivery versus payment? All of this and much more have been addressed to a very large extent through infrastructure development done by the regulators, by the stock markets, in active consultations with custodians like ourselves.
Okay, but I mean, the other thing that institutional investors want, which we were talking about earlier, is corporate governance standards and transparency. Do you think that they've got enough there, enough progress has been made there to make the region attractive to them?
It's difficult to say whether it's enough, and I think the levels vary from company to company. I think at the large companies, definitely a lot of progress has been made, and I think overall there is again a recognition of the fact that if you want institutional investors, you've got to be answerable to them, so you've got to provide the material for research. So I think progress has been significant.
Now, one of the big developments in Dubai over the last few years has been the DIFC.
Indeed.
I mean, what sort of contribution has that made to the maturing of the UAE as a market, and also creating a regional opportunity or even a global opportunity in the Middle East?
I think the DIFC plays a key role in a strategic gap that existed. So the legal framework in the UAE and the rest of the Gulf is what it is. A lot of institutions, especially foreign institutions, want to set up offices in an environment which follows international regulations. And changing the entire regulatory infrastructure of an entire country is not always simple. Creating an island, a financial center, which is predicated on the lines of international regulation, solves that problem. Actually, UAE has done this beautifully in the case of manufacturing. We talked about the Jebel Ali Free Zone earlier, where an international company can actually have full ownership of their manufacturing setup. The Dubai International Financial Center is a natural extension of that same concept to the financial services.
Thank you, Arindam. My name is Brian Caplen, editor of The Banker magazine. I've been talking with Arindam Das. He's the regional head of HSBC Securities Services for the Middle East and North Africa. We've been talking about the economic outlook in the region and the opportunities for companies and institutional investors to take part in that growth opportunity.